Greg Diamond here with another edition of Diamond's Edge videos. And this week is going to be important with the Federal Reserve meeting happening on Wednesday. And, a lot of people coming out saying, well, they're going to do 25, they're going to do 50. For me, it's not necessarily what they do and how much they cut. It is more of what the market's going to react to. Okay. And there's a couple different scenarios that we'll look at, again, when we combine what happened with these time factors and then heading into an important meeting like the Federal Reserve meeting, this is where I think volatility really starts to pick up. And what do we look at in terms of time factors? Well, this is a chart of VTI, and this is a total stock market. So it's a really good barometer of everything that's happening in the stock market. The Vanguard total stock market ETF, ticker VTI. All right. So we had looked at late August, early September as a time factor window to be important. And we can see that clearly happened. This topped out late August. And then we actually made a slight new low into last week. Okay. Now, ahead of time, you never know whether these inflection points, these time factor windows I discussed, is going to be a high or a low. Sometimes it's bigger. Sometimes it's shorter. Sometimes it's in between or medium term type of inflection point, but they are clearly important, as you can see from this chart. Okay. Now we also have to combine price. And that's why I love using, I talk about the three tenets of technical analysis in my strategy, which is time, which is GAN, Elliott wave, which is price, and then the technical indicators, kind of complement those two things. And we can see a perfect example of that here. Okay. So I have this 1, 2, 3, 4, 5 here. All right, we've got the high in late August, early September. Then we got a low last week. But if we combine what happens with the Elliott wave, we can see if I'm right about what happens, we get this wave 5. Now, what would that mean heading into Wednesday? Okay, hey, the Fed's going to cut for the first time in a couple of years. This is a new beginning, blah, blah, blah. Well, that would get everyone piled in to complete this wave 5 high, and then we have, a correction to really confuse people and frustrate people most likely, right? Now, let's see what also happens with this composite index at the bottom. And you can see here that, if we get this new high in price, we're likely to see a lower high on the index, composite index, and that's negative divergence. That's a warning. Okay. Let's also take into account what's happening with what was a leading sector in the market, which is semiconductors. Here's SMH. Okay. Now you can see here, this is a downtrend, very simple stuff here. This is a series of lower highs. And look, the VTI is up here. Okay. It's back up to getting a new high here in July, but semiconductors, which were leading, NVIDIA, AMD, TSM, all these big chip companies that were leading are now starting to lag. That in itself is also sector divergence or price divergence rather between sectors and indexes. So to me, that is also very telling. Okay. We can even look at something like XLF financials. Okay. Had a nice run up, right? Topped right into that late August, early September time factor. Did make a low last week, but we also see here it's starting to make a series of lower highs. Now, maybe this follows VTI and trades up a little bit higher here, and then falls. So it could be something where we see a swing like this. Okay. So it would track very similar to VTI, and then, something like that, as we get into late October around the election, I'm going to go over how we might see some big bottom early if I'm correct about what happens here over the next couple of weeks. So this is something that I'm looking forward to this week. Again, not in terms of what the Federal Reserve is going to do. They're going to most likely cut. I think that's pretty much priced in. But how things react, how investors react. If they do 25, does that mean that they think inflation is a little too sticky? We saw CPI, PPI come out last week. It didn't change. Okay. There wasn't a big drop, right? Does that mean that the Federal Reserve, maybe we aren't going to hike as much? Or if they do 50, is there something that they're more concerned about? You saw the 800,000 plus jobs that were supposed to have been circulated back in the market suddenly just disappear. Is there an issue in the labor market? I'm not going to, sit here and predict why or what they're going to do. To me, what matters more is the reaction of the market. And if we look at it based on time and price and the indicators, I'm looking for increased volatility to start this week and then really heading into the end of the year. All right. So thank you very much. I'll see you next week.